Good afternoon, everybody. Thank you so much for coming. We're about to hear from Andy Shea, who's one of the most perceptive analysts of China's economy and who's not shy of speaking his mind. And as an aside, a couple of nights ago, I was listening to him arguing with one of our Indian speakers, Mihir Sharma, about the relative merits of China's economy and India's economy. And it was getting very, shall I say, enthusiastic discussion. And they ended up with the conclusion that there is a reason why God created the Himalaya mountains between China and India. But now let me call Andy Shea to come and talk to you. Andy is based in Hong Kong, probably the smartest economist in Hong Kong, at least he is for my money, and he's going to talk about the future of China's economy.
Thanks, Terry, for having me. Well, this is there's Chinese proverb that says that may you live in interesting times. And I think now is very interesting. Everything is moving. Now, I remember that in 2007, about this time of the year, a hedge fund nearby invited me over for a brainstorming session with their traders. And in the meeting, there was a well-known senator talking, and he asked me the question, he said, when China's GDP will surpass the US's? I said, in 15 years. He literally dropped off his chair. He said, my people told me it would be 100 years. Well, I started by saying this because I was, unfortunately, my prediction was wrong, not quite right. This year, China's nominal GDP is likely, the government statistic is about 6%. Now, and the currency is going down by about the same or a bit more. So China is kind of on treadmill. If your economy is growing but your currency is going down, you're not making gains. So in China or in financial markets, I've been branded as a China bear. That is unfortunate. I'm not a real China bear. I was very positive about China. I was probably among the first one to see that China was going to become the factory of the world, and that would power China's growth. But I kept pointing out all the problems in the economy, so people thought I was being bearish. So a lot of people said, why you are bearish? Look, the economy is growing very rapidly. I always answered that it's like when a boy goes into puberty. He's growing very rapidly, but he's picking up smoking and drinking, and then I say that drinking and smoking not good for you. Then your counter argument is that look, he's growing. Smoking and drinking cannot be that bad. So that's what's been going on in China. Is that I was very positive about China. Actually, I made a living by reading the misunderstandings of both the inside and outside of China, of China's role in the world. I always thought that China was driving the world, not the United States. And the people here, like especially Federal Reserve people, they think that they're driving the world. It's not true. It's actually China is driving the world. It's because of China's size. Even though China's economy is now $10 trillion, but into anything tangible, China is much bigger than the United States. So if I come back to this, why the world is not growing. It's very much about China. But China is the growth. A lot of people misunderstand China as another emerging economy. China is not another emerging economy. China is re-emerging. China had many decades of economic development before. In the 1920s or 30s, China was very prosperous along the coast. And the income gap between China and the West at that time was smaller than now. So, but China then got into this bad patch, a war, revolution. China basically was in depression for 50 years. And as it re-emerged, the people were productive. Their productivity was suppressed by the political system. China, when China came out, it would have a disproportionate impact on the world. That's why when I was at the World Bank and I disagreed with this strategy for Southeast Asia to develop manufacturing exports. They thought that was the way out. I always knew that they couldn't compete against China. But they thought Southeast Asia was going to be high value added and China low value added. So if you do not look at history, you would make big mistakes. So this is sort of Chinese people's productivity. Even though now China's per capita income is $7,500, but the average people's productivity is similar to here. And China's economy should be much bigger. And the troubles we're talking about are related to this, why China's economy is not much bigger. You look at Japan. Japan started development in the 1950s. By the time it peaked, it was about 40 years. Japanese currency tripled in value from 360 to the US dollar to 120. You look at the Chinese currency. When China started, Chinese currency was 1.5 to the US dollar. Then devalued for like 15 years until 93 when the currency was 10 to 1. Then Zhu Rongji came. Zhu Rongji knew that if you devalue the currency, you have no future because your people don't want to hold your currency. Okay, so this is where Zhu Rongji started by sticking to hard currency policy. Then he restructured the economy around that. In 1998, when the Asian financial crisis happened, I thought that China should devalue. And I made some noise that caused the stock market to fall a lot. And Zhu Rongji paid attention to that, and he thought about a devaluation. He came out in January 1998 on CNN and said, why we would not devalue, right? First is that China is a big country. If we devalue, other countries will devalue. Where's the end, right? So the second thing is that our wage is so low. Why do we need a devaluation to increase competitiveness? Doesn't make sense. We should, if our wage is so low, we're still not competitive. It must be our inefficiencies at home. So we should be dealing with these inefficiencies. So that I think that that kind of thinking led to a round of reforms, shrinking the state-owned enterprise, privatizing the housing market, developing infrastructure, joining the WTO. These are 4 areas of reforms over the following 3 to 4 years laid the foundation for China to grow. Okay? So what we always wanted is for the successors to Zhu Rongji not to mess things up too much. They didn't have to do much. Just don't make huge mistakes. So this is why in 2007 I was still confident that China was on the right path. Then in 2008 when the financial crisis happened, China made this huge fatal mistake. At that time I described this investment stimulus as a catastrophe that will happen in 5 years' time. Because 2008 was a turning point. China misunderstood that as a global economic cycle. So China needed to stimulate the economy with more investment. So you would create all that capacity. When the global economy recovered, you could export more to make use of the capacity. But 2008, my interpretation was that 2008 actually was Chinese customers, the consumers in the West went bankrupt. So that means that they would not come back. So China was building capacity for customers that would not be there. So that's sort of the huge mistake that the government made. The overinvestment since 2008, roughly my calculation is about $7 trillion. And this is a moving target because China is not changing. The investment, the national statistic says that the investment is 45% of GDP. But there's another 10% of GDP is government consumption. Most of that, I think, is investment. So it's reasonable to assume China is investing half of GDP. But if the country cannot export like before, China's growth rate could only be 4 to 5%, not 10%. So if you invest half of GDP, you must grow at 10%. Otherwise, your money will be wasted. If you can only grow at 5%, you should invest less than 30% of GDP. So that's the simple arithmetic. That unfortunately, that easy said than done. It's the difficulty with changing the economy is this investment is largely carried out by government agencies and student enterprises. Government agencies and student enterprises spend half of the money in China, mostly in investment. And reform is difficult because of the people. These people have been doing these things forever. So they demand resources to keep doing the same thing. So this is where the politics is not working. So the critical reforms that Korea did after 1998, Korea did basically in a couple of years' time because they crashed. So they stopped this investment-led growth and shifted to a more balanced growth model. And so the economy has improved over the last 15 years. China still is not taking a step. So this is sort of and it's still trying to support the economy with more investment. It's just throwing good money after bad money. So all the GDP doesn't matter. If you report a higher GDP number, you should interpret it as bad news, not good news. What China needs to do is to do the adjustment. And if you do the adjustment, you give the money to the people to spend, then the economy will become healthy. 5% growth rate is very good. If it's quality growth rate, the stock market, think about China's growth. Since the stock market was set up in 1992, the nominal GDP is up 22 times. But the stock market, nobody has made money in the stock market. This is totally nuts. Think about usually even Japan did better than China. You lost money in Nikkei, but you made money in currency. At least you made it overall. You still made money. In China, you haven't made money. It's because of a subsidy. The investment side is so large. Your return on capital is very, very low. This Chinese government, because China is run by engineers. Now the top people are liberal arts people, but the country is actually at operational level is run by engineers like my classmates. When we went to universities in the 1980s, everybody wanted to major in science and engineering, and these people came out, and they were doing projects. Then by the 1990s, they matured. They could do big projects. That's the time that China took off. So China had this asset that was effectively used before, but now we have enough. China started building a freeway system in 1998. At that time, Zhu Rongji wanted to stimulate the economy, and he thought that. Thought about Roosevelt did in the 1930s, building highways, and I said, that's a good idea. He walked into the Ministry of Communications, said, do you have a plan to build highways? And my classmate happened to be the person who already got the sign because he went to school around here, and he went back and designed the whole highway system. It was just on paper. With I-95, the system is very similar to the United States. And Zhu Rongji went in there and said, oh, this is wonderful, let's do it. Then China didn't have the capability to do that. He said, how much can you do that? The ministry said, 1,000 kilometers a year. And Zhu Rongji said, double that. Now you know how much China is building each year, 10,000 kilometers. So China's highway system now is bigger than the United States. And still adding 10,000. And China's automobile fleet is only half of the U.S. size. So this is why even the coastal cities, you see congestion. But most highways are underutilized. So why do we want to build more? So this is an example is that it's a misallocation of capital. And all China's problems could be traced to this misallocation of capital. Financial sector problems must come from the real economy. If you have losses in the financial sector, there must be bad investment in the real economy. These are two sides of the same coin. So that's why China's credit keeps growing. The reason is because the investment is not making returns. So you have to keep a growing credit to cover up the cash shortfall of all these investor projects. So this is sort of I think that China, in a way, the problem is too much of a good thing. It's when I go to India, I always say, they ask me what India could learn from China. I always say that just keep investing, invest. If you don't invest, you don't never get anywhere. Don't look at the GDP numbers and corporate earnings. Those are meaningless numbers. Only investment will get you to become a developed economy. But what if China is overdoing that? So there's such a thing of too much of a good thing. So this is where I see that this turning point, unfortunately, coincides with political insecurity. Because the required changes are mean that the government needs to shrink. So the government needs to reduce its control over the economy. Liberalization, basically, cut the taxes, privatize strong enterprises, liberalize the financial market. That's what you need to do to get the economy going. But the government now fears that if the government gives up control over the economy, the regime could become unstable. That's unfortunately is intervening with our reforms. I think this is a very unfortunate timing. So China is taking a detour. If you have a 6% growth rate, then you have a 6% devaluation, you're basically on a treadmill, you're going nowhere. So this is a very unfortunate. I don't know when China will wake up, but usually reforms are pushed by crisis. Right now, it's difficult for me to see without a crisis how the reforms can get going. And the crisis usually in emerging economies, crisis starts with a balance of payment, foreign exchange reserves going down. Then you have a liquidity problem in the financial system. Then all that inefficient investment gets exposed. Okay, so and that's how Korea happened in 1997. It's basically someone pulled the rug under your feet, then everything gets exposed. But in the case of China, it's very different because China is very large and the government can't do anything. Last year, money was rushing out of China, and a total about $1 trillion left China. So there was a sense that this thing was going to collapse. But the Chinese government has extra tools. And one of the reliable tools Chinese government has is to send people to jail. So if you send these people to jail, then money doesn't go out, right? So when you argue with Chinese government officials, you say money is going out because the economy has all these problems. They keep coming back asking you a question: who is taking money out? So actually it works in the short term. You see, they send tons of people to jail. They're still arresting people. They shut down all the underground exchanges. So now it's very difficult to take money out. So there's only one channel is through the trade account. You over-invoice imports and under-invoice exports. So that's why last month China's imports rose, and a lot of economists said, "Oh, Chinese economy must be doing very good." Actually, that means that the LA's property market is doing very good. That's why yesterday I talked about the business opportunities from China in the next few years would be money coming out, the people coming out. That's I see until China change. I think China is a big country, it's very unused. The government has so much control. So when these things are going to happen, I don't know. It's like the China's property market. Because China's property market is not like a U.S. property market. U.S. property bubble. U.S. property bubble was for people to take out home equity loans for consumption. So when the bubble popped, where's the money? The money gone. It's in the stomach, gone. So in China, it's different. In China, the property bubble is all about Chinese people. Like when they see these, oh, I'm rich, they don't do anything. They don't eat more. They just look at it. I will go to sleep. I have a big smile now. So but actually the money is taken by the government. The government, the property bubble in China is very much for raising funds for the government, because 60% of the purchases value goes to the government through taxes and land sales. So the government doesn't think the property bubble is such a bad thing. So they keep it going. Chinese property bubble is not a market phenomenon, it's a government phenomenon. Now its bubble is very large. And Shanghai's land value is a lot more than all the land value in the United States. And Beijing, Shanghai, and Shenzhen, 3 cities, the property value is about the same as all the properties in the United States. And these 3 cities, the GDP is about 1/10 of the U.S.'s GDP. And now, in terms of relative price, household income, 1 year's household income buys 1 square meter. So if you want to buy 100 square meters, it's a 100 years household income. That is higher than Japan in 1989. I remember when I was in Japan doing a summer job in 1988, I saw this 100-year mortgage. The 100-year mortgage. The Japanese still paying off there. You know why Japanese? One reason Japanese are not having children. I asked one guy. The guy was still paying his mortgage. I said, 100 years mortgage. I said, why are you doing that? Shouldn't you be running to Australia to become farmer? But the Japanese say that we don't do that. We keep paying. But I don't get married. I don't have children, because if I have children, they have to pay too. So you say I pay until I die. That's it. But in China, I'm not sure the same thing is going to happen. China is picking up all these tricks like zero equity loan. Now China doesn't call it zero equity loan. They call it down payment financing from the shadow banking system. So now this round of speculation is all based on that. You think about it, if its price is 100 years of household income, you cannot find enough money for the down payment. That's about 20% of the face value. So it's really this is what the shadow banking system is about. Shadow banking system is generating about 20 to 30% of the credit each year. So it's becoming very, very large. And the source of financing for the shadow banking system is issuing so-called trust products to people promising fixed return. Actually, they don't tell people what they're doing with the money. Then they lend money to people to speculate in the property market. So this is where, if there's a trigger in China, it's probably going to be that. But the issue is that the Chinese government is watching. If some bonds default or some trust products default, the government will come in to bail them out. So this thing keeps getting delayed. It's like in 2008 when the U.S. housing prices started. One central bank guy called me and said, why isn't the Fed is not buying properties? If the Fed is buying properties, then the crisis is over. You see, Chinese are very clever. So very clever. So you can imagine when the property market starts cracking, Chinese central bank may come out to buy properties. But the bubble is so huge, right? It's about over 40 million flats are empty. And over 50 million flats are under construction. We're talking about 100 million flats. That's equivalent to all the properties in the United States. So it's overhangs gigantic, and nothing like this has ever happened before. So this is, I think, China's Achilles heel. Property is a symptom, not the real sickness. The sickness is overinvestment. Property is used to finance this investment. So I think that it happens in a year or in 5 years, I don't know. But until that happens, we are all, the world is like a suspended animation. Because you look at all these central banks are stimulating. What they are waiting for? With the zero interest rate quantitative easing, they always say we are data driven. What are they waiting for? They're waiting for investment to pick up. When investment picks up, then employment picks up, then wage will go up, right? But China is investing $5 trillion each year into industry already with overcapacity. And $5 trillion in China it's like $10 trillion here. Because investment is cheap in China. So they can create a lot of capacity with $5 trillion. With that kind of capacity addition, No, anybody else does investment must be crazy. So whatever the Fed does, American companies not going to invest. So what happens is that what the central banks stimulated, they create worldwide bubbles, property bubbles everywhere, because capital has no place to go, because China is creating these forced savings. There's savings glut. It's because of the Chinese political system. And everywhere in the world, people speculate in property. So this is sort of, I think that, that's why I always think that central banks misunderstand what's going on in the world. Their stimulus doesn't matter. It's like Japan is being like in this shape for 25 years. Japan's deflation is partly it was due to the bubble initially bursting, but later it's all due to competitive pressure from the neighboring countries. So if you are facing more competition from your neighbors, you will have deflation, and you cannot solve this problem with whatever policy. The only way to do it is through restructuring to increase your productivity. That's the only way out of your deflation. It's not through stimulus. So this is sort of what I see. What's going on in the world, and until China changes, I don't see the global economy is going to grow well. I stop here, and maybe we, Terry.
Thank you, Andy. As usual, you blow my mind with your figures and your analysis. Let's get some questions. We have a microphone right here. Please put your hand up, and Alexander will get to you. There's a couple over there, right there.
Kevin Hanley with Merrill Lynch. Andy, I don't know if you're aware, but there's some very large commercial and residential construction projects going on downtown that are supposedly from Chinese investors. Do you see that as another symptom of too much of a good idea? Or is that government sanctioned? If you know anything about it, I'd appreciate your insights.
Oh, that's just capital flight. It's because that you can go to the government for project approval, for taking money out if you have a concrete project here. So it's really for capital flight. China is outbound acquisitions. The driving force is capital flight. It's basically people expect the currency to depreciate. That's why they're buying foreign assets. That's why they're overpaying for foreign assets.
Hi, it's Arthur Krober from Dragonomics. Clearly the main domestic financial risk in China comes from the property market, but the main external risk, as you suggested, comes from capital flight. A lot of the flight that we saw last year was driven by expectations that renminbi would continue to depreciate much more sharply against the dollar. And we're now looking at a world in which at some point the Fed is going to hike rates, and some people think that that's going to lead to further dollar appreciation. So at what point do you get worried that rising dollar and continued depreciation expectations trigger a scale of capital flight out of China that could really be problematic?
Yeah, I think that China is intensifying crackdown. I think the Chinese government is, in terms of people leaving, taking money out, I think that it's going to be a few years because the Chinese government has so many tools. Now the trading companies are taking money out through over-invoicing imports. But the top guys are looking at foreign exchange reserves every day. When the foreign exchange reserves are falling, they ask who's taking money out. So what China does when they have no evidence, it's called kill a chicken and show it to the monkeys. You just pick a guy, you send him to jail. Then everybody else is like, oh, I should have stopped doing that. But maybe a few months later, they do it again, right? So I think that this is basically the money leaving China in quickly is not likely. So this is where I do not see how this thing is going to play out. It's very difficult to see how this thing is going to play out. It could be political struggle, something happening because somebody deliberately sets off a financial crisis because it's in his own interest for it to happen. So that's one scenario that's possible.
Thanks, Natty. That's a sort of great explanation of what's going on and the sort of mechanism by which this bubble is perpetuated. One of the things there was that you mentioned was the forced savings that keep the sort of property bubble going. But forced savings, of course, are, they restrict consumer choice. And now you have an increasingly assertive and ever larger middle class in China. What is the point, in your opinion, that people will start saying, hello, I want formal savings, the formal financial sector to give me a better return on my savings, and start putting pressure on the government to end forced savings?
Well, I think that, that to some extent, the government is giving you higher wages. Wages have gone up quite a lot. But the Chinese government is unconventional. The Chinese government is trying to game the people. Chinese people are very hardworking, save money, but they have their weakness. Weakness is very speculative. So what are the Chinese, when Chinese people have money, the government will tell you, hey, do you want to buy stocks? How about properties? They are going up. Do you want to try your luck? You feel lucky today? So the government is turning the whole damn thing into a big casino. Then the Chinese people lose all their money, their hard-earned money. So their money goes into subsidized student enterprise. They keep it going. So the Chinese government is very unusual. It's very difficult for outsiders to appreciate the power it has. It controls the media, controls the financial markets. So it can play the people. It can play the people.
Thank you. Two property questions. Overcapacity is a big issue. Property speculation, giant issue. What about a property tax? And what about land to the farmers? What are the prospects for those two reforms?
A property tax is unlikely. Chinese government behaves like a good capitalist. They think about how I can get the most money. If they get more money, by selling properties, they will not impose tax. But one day, if the properties don't sell anymore, then they will impose tax. You see, so I think as long as the property market is working, it's not going to happen. There are rumors all the time. It's not going to happen. On the agricultural land, allowing private land, I don't think it's happening anytime soon. I think the ruling class are against it. China is, because they have seen the advantages of government control over land. Without government control over land, China could not have developed so fast. China could have developed infrastructure so quickly because they have land. But what's going on in India? Indian government invited me over many times, asking me what was my suggestion for India. I said, pass a law for mandatory land acquisition for infrastructure projects. Without that, your country is going nowhere. But in China, they don't need that because they have all the land. So that's why I think they don't want to give up this privilege. The land private ownership will only happen when China truly the political system changes. When China, there's no real ownership in China. The property you have, there's 70 years of usage right. It's not real ownership.
Andy, you said that Zhu Rongji did these reforms, and then the hope is that the people after him don't screw it up. And the things you're talking about on needed reforms, you got Zhou Shaochuan, Wang Qishan, Liu He, Fang Xinghai, a whole bunch of people surrounding Xi Jinping that are from the Zhu Rongji era that have been reformers in the past. So why isn't it happening?
I think there is no Zhu Rongji. So I think Chinese government is it's kind of the powerful government in China is a two-edged sword. It's you can do big projects. You go to China, you can see that. So it's an advantage. But also, it can be entrenched. It becomes entrenched interest group. There's no political class to overlook them. They are the political class. So in Chinese history, you need the head of the government to be really, really powerful person to manage this creature. So Zhu Rongji was a very unusual person, and he was willing to risk everything So that's why the bureaucracy were cowed. They listened to him. Now I think that it's very difficult. All bureaucrats need to do is not to follow your orders. So this is where in the Chinese government today, very few people are making any decisions. So the government is pretty much paralyzed. So that's why how we can have reforms.
Okay, we've got time for one more question so we can keep on time. Thank you.
Yes, I've always heard that the primary problem is that the people will save the money, they won't spend the money, they won't consume. So I'm wrong about that then.
Chinese, most savings in China are not from the household sector. Household disposable income is quite low. It's 40% of GDP. And the savings rate is about 30%, just like in Japan in the heydays. So it's 12% of GDP net savings. And China's gross investment is half of GDP. Net investment after deducting depreciation would be close to, I think, 35% of GDP. So most of the savings are not from the household sector. It's from the government taking your money away. It's the government fiscal revenue total together is about 38% of GDP. Redistribution is maybe 10%. It's unlike in the Western government, most of the budget is for redistribution. Okay, in China, redistribution is a portion, then most of the money is spent by the government. And they do their own projects. And they rather subsidize anything they like. No, they're subsidizing startups. Yeah, they're subsidizing venture capital funds. If you want to start a venture capital fund, they give you some money. So they incentivize you to find somebody who wants to invent something. This government has gone very, very far. It's spending money very, very freely. So Chinese people don't have a lot of money.
Andy, thank you so much. Thank you for your great question.